Hi, people. Thank you for stopping by at Building Wealth with Rajeev. If you want to be a millionaire, if you want to have six packs, and want to be a philanthropist, all before 30, this video is a must watch for you. I'm talking about Rash. Rash is a Singapore based investor, close to thousands of budding investors, and an international speaker. I've been following Rash for quite some time now. The thing which intrigued me most about Rash was that during time of COVID, everybody was talking about huge declines, doomsday. Rash was optimistic. He was talking about this is the period when the generational wealth will be made. I rejected him. Now, looking back, I have no choice. I sat down with Rash and asked him what is his investment philosophy, what are his top picks, and more importantly, what makes him so successful at this young age.
Thanks, Resh, for giving time, and I'm so pleased to have you here.
Rajeev,
Uh,
it's my absolute pleasure. I've been watching your series, interviewing some absolutely amazing investors. My friends, if you're watching this YouTube video right now, please go and subscribe to his channel. Check out all the different videos. You'll get so many gems from very talented investors from all across the world. And Rajiv, thank you for putting out these interviews, getting these people on board so that we as regular investors can actually learn from these brilliant minds. So thank you so much. And I'm so honored and it's my pleasure that you actually called me to actually interview me as well. Hopefully I will be able to deliver some good value to you and your audience.
no, Resh, I've been part of your group. I've been one of your followers, actually, I must say, and I've been so impressed with what you are and what you've accomplished, and that's the reason I reached out to you. So, just tell me, you from a humble background to know this financially independent $1 million person, even before your 30s, how did you accomplish that?
Well, man, it's a long story, right? It's a long story, but let me just cut it short. Let me just cut it sweet. So, very, very simply, I realized that there's two very, very big things that actually got me accelerated success, right? Number one, the people you hang around with. When you are able to leverage on giants, when you're able to stand on giants' shoulders, you move a lot faster. If you're starting out by yourself, if you're watching this video right now and you're starting out by yourself, trying to hustle and trying to do your own thing and trying to do that, it's going to be a long, arduous process. But very, very simply, exactly what Rajiv is doing. If you're able to build connections, if you're able to establish partnerships with people who are 2 steps, 3 steps, 10 steps ahead, that's how you accelerate a lot faster, right? So in my career, I was very, very blessed that I was able to stand on the shoulders of giants. And because I was able to stand on the shoulders of giants, I got to see a much further, much bigger horizon. And that's basically what led me to having accelerated success in a short period of time, right? So to be very, very specific, I started out on my own. I started investing, and what I started doing was I started my own, investing school. Started, just trying to teach people about investing, right? Small group. Every month I used to teach about maybe 10 to 15 people, right? I did this continuously for the last, for 2 years, 3 years. Eventually, I was scouted by one of my mentors, and eventually I actually joined forces with him. And he was running one of Singapore's largest investment training schools, and I soon became one of the head coaches in the school as well. And because of that, I was able to travel across the world, spread my wings, fly, got connected to some of the top fund managers, got connected to some of the best investors in the world. And that's how I really, really started growing in my knowledge, in my connections, and also in my personal wealth as well, right? So again, guys, very, very, very important. It's not about what you know, it's about who you know.
Yeah,
I think it's a very,
that's
very important thing, a very important point.
that's a gem. I mean, but I think you're being polite and humble. You're underestimating your own potential, your own ability as well. I think it's good for you to talk about that as well, Rash.
Yeah, my own. So I'm being humble. No, no, no. I said, to be honest, man, really, really, it was the favor of God in my life. And, I really, really thank. And again, one more thing that I really believe is this, right? In any given situation, right, the biggest givers always win. When you learn to give, when you learn to share, when you learn to give unconditionally, the universe will bless you back in return, right? Whatever you believe in, God, universe. So give unconditionally, right? Don't expect anything back in return. But when you do that, and when you do that consistently over time, you will be rewarded. So it doesn't apply just to investing; it applies to any area of your life, right? Like if you're in a career and you are wanting to get a promotion, how can you give? How can you be a bigger giver? How can you actually go beyond your call of duty, right? To actually add value to your organization. Something that if you ponder about and you actually execute and do, that's what will set you apart. In the typical 9 to 5 in Singapore, most people are just looking to do what is told of them to do, and that's it. Then they're done. I'm back home. I'm finished. Right? That's not what I need to do. But very very few people go beyond their call of duty, and for those who go beyond their call of duty, guess what? They are favored and they get promotions. They get to move up the ranks a lot faster. So think about it, right? There's something to ponder, to think about, and that's how you will excel and go a lot faster in your journey.
Yeah, no, I think makes a lot of sense. Tell me, Rash, you have a large investment following. A lot, and I've been following you. I've been learning so much from you. And what's your, how do you invest in what's your investment philosophy? How do you pick the companies to invest in?
Great question, right, Rajiv? Many, many, many things have changed in the last 1 2 years. I feel the scope of investing has shifted tremendously, right? I was trained in the school of value investing, right?
Yeah,
Where we're buying companies which are undervalued based on valuations, based
hmm
on valuations like your P ratio, looking at companies which are trading at lower price to book values, for example, right? Things have changed tremendously, right? Especially in the last 1 year, we've seen many companies, many SaaS companies, for example, many growth companies with no earnings to speak of, just flying through the roof, right? And value stocks, trudging along, doing meh, okay, nothing really much happening, right? So, my investment philosophy has shifted as well, right? Because right now, whenever you're talking about, oh, have you checked out this company? Have you checked out that company? For example, you look at their financials and I'm like, what? What is this? They're not earning any money. They have no cash flow to speak of. Everything seems negative, right? So, my investment philosophy has kind of shifted from what it used to be and what it is currently right now. So what I would consider myself to be would be a value growth investor, right? A value growth investor. Let me elaborate, right? So
yeah,
what I do is I maintain, all right, in my entire portfolio, I try my best to actually maintain a good amount of growth companies, right? Some of them might not have earnings to speak of, right? But they are tremendous, right? If you look at their total addressable market, if you look at their potential to grow the business, if you look at their raving database, oh, it's absolutely fantastic, right? So just to throw some examples, right? One of them which was my favorite is C Limited,
yeah, yeah,
right?
yeah, yeah.
So C Limited is one of them which I really, really, really like, right? However, if you look at your financials, on the surface, it's absolutely terrible, right? Like, net income is negative. All the regular metrics that we look at would be negative. Okay, but of course, their revenue growth and everything is spectacular. However, not really earning money and valuations are ridiculous. All right. Another example would be like a Tesla, right? Like a
Yeah.
Tesla. Tesla is earning money right now, but if you would look at it at traditional valuation metrics, no value investor would invest in Tesla, right?
Yeah.
Warren Buffett would look at Tesla one time and just throw it aside, right? And the reason why is very simply because, like, he's not going to invest in something that's trading 1,000 times multiple, right, to its earnings. No way, right? Anyways, then again, if he doesn't, he's missing out on a huge opportunity, right? Huge opportunity, right? I always like to recall the story of how Warren Buffett actually once mentioned that one of his biggest investment mistakes was missing out on Amazon,
Yeah.
right? Back in the day, people used to say Amazon is crazy, it's so overpriced, so overpriced, so overpriced, and they kept ignoring it, right? Until in 20, if I'm not mistaken, 2019, when Warren Buffett picked it up finally, and he actually mentioned that that was one of his biggest mistakes, and that he should have actually got it a long, long time ago, and have compounded his wealth tremendously, right? So again, I do not want to miss out on these growth opportunities. But at the same time, with these companies carry a lot of inherent risk, a lot of volatility, affects the beta a lot, right? So
Yeah,
what I
yeah,
do is I mix them together with the stocks that I really like, which are stable, which have good earnings, right? Which have low debt, which have great cash flow and are doing really, really well. I prepared two stocks which I wanted to talk about as well, right? But
yeah.
yeah, both of them I would say are internet companies. They are, they're
Yeah,
not.
let's talk about them. Let's talk about two stocks which you think are your top picks and which you're looking at very closely.
Yeah. Yeah, again, Rajiv, is very, very interesting that you say this, right? Like, but most of them are internet-based companies. I, with regards to companies that are brick and mortar, for example, some of them have given me great returns, right? Back in the day, I used to invest in Starbucks.
Yeah.
Starbucks, absolute banger, did really, really well for my portfolio. But then
Mm,
nothing compares to the returns that these growth companies, these internet companies give me, right?
yeah.
And again, let me just go through one of them right now.
Yeah.
Okay.
Yeah.
And whenever I speak about these companies, if you come into my mind and actually understand how I analyze these companies, it always comes, the first question I always ask myself is, what is the problem they're trying to solve?
Yeah.
Right? What is the problem they're trying to solve? And the first company I want to talk about is this company called Upwork.
Oh, okay. Okay. Good one.
Upwork, right?
Yeah.
So I think your previous guest, I can't remember his name, Brian Connelly or something. He mentioned about Fiverr, right? But
Brian, hi. Yeah.
Brian, was it Brian?
Brian. Yeah. The Motley Fool writer.
Yeah,
Yeah.
Molecule Writer, guys. If you haven't checked out that video, click on the link below, click on his channel and check out that video. Right, Rajeev's video with Brian Motley Fool. Click on it. It's a great video. He's a brilliant guy. Right, go and check it out. He spoke extensively about Fiverr. All right. But today, a very, very similar industry, and I want to talk about Upwork.
Yeah.
Right,
Okay. Cool.
Upwork, which is in a very, very similar industry, but Upwork is slightly more professional. All right,
Yeah.
take on people, they take on freelancers for midterm, long-term projects as well, and you find a lot more qualified people, like proper project managers, proper, sometimes you find CFOs and all that on Upwork, right? So it's an incredible platform. And the reason why I picked it, number one, jobs will forever be around, right? Like we will always need jobs, right? Because we need money to sustain ourselves. Businesses, they will operate people careers, right? So it's something that is absolutely vital, right? Something that is absolutely vital. So this is one of the reasons why I looked at it. And the second reason why I actually am looking very, very closely at Upwork is because, right, one thing that is undeniable, if you ask me, Resh, coming out of this pandemic, what do you think is one of the sectors that are growing tremendously? I would say it's the gig economy, right?
Yeah.
With this culture of people working from home, I think both you and I currently right now are working from home, right?
Absolutely.
Like, hey, we can have a lot more side hustles, right? Find jobs on the internet, do things, on the side, for example, and that is growing so much so quickly. And in fact, many people actually forced, right? Many people actually forced to be able to do that, right?
Yeah.
And many people also desire to build a family, right? To build a family, to basically be at home with their children, for example, but at the same time contribute, work, and earn side income.
Yeah.
And that's where companies like Upwork, companies like Fiverr, for example, come in to meet this need,
Yeah.
right? So
How's
that's
the?
number
Yeah. Sure.
yeah.
Carry on.
Yeah. So that's number one, right? Number two, the second thing which I really, really, really like is this. Okay. So number one, I'm talking about this. Number two, I'm talking about businesses. Okay,
Mm-hmm.
businesses. Okay, so as a business owner myself, right? Whether we like it or not, it's always about bottom line, right? How much can I how much revenue I bring in and what's my expenses. What's my revenue? What's my expenses? What's my revenue? What's my expenses? And I'm always thinking about how can I reduce my expenses. And if you
Mm-hmm.
actually do go online to research and dig a little bit deeper into how much it will actually cost for you to actually hire somebody on Upwork, right, to produce something, to get a project done, right, as compared to employing somebody full time, your jaw will drop. Your jaw will literally drop, right? Recently, I was just talking to one of my friends who actually hired somebody off Upwork, to do an entire fitness tutorial for him, right? He was actually building his entire fitness program, right? Did the entire fitness program for him, push-ups, did everything, good lighting,
Mm.
all of that stuff, beautiful, absolutely beautiful. It was nearly about, I think, content-wise, it was 45 minutes times 5 videos or something like that, and all of it, typically, if you want to get somebody to go and do it, it'll be, a few $1,000s with all the setup and
Yeah.
all that. But this person did it, and it was for $200.
Wow.
So what am I trying to say? If you do bother to go and do your research and dig a little bit deeper, you're able to find the best talent. You're able to find some really, really good people, right? To produce stuff for you, to create the things that you want to create at prices that you cannot get when you're hiring somebody in person,
That's true.
right? So that's something. And again, the next thing which I want to share with you is this. The beautiful thing about Upwork is this. Once once the client actually finds somebody who is really, really good on our work, the retention rate is very high,
Mm-hmm.
right? So if he finds a person and the person delivers great work, right, the person delivers great work, the person is up to standard, they really like each other and both parties are great, then the relationship continues and they keep becoming recurring customers throughout.
Yeah.
Right? So what Upwork actually has done in its algorithms is they have actually, over the last few years, they've constantly improved, right? To actually get reviews, to actually find, who are the best, and they promote the best people to put them at the top so that they actually get more job listings,
Yeah.
right? So because of that, what's happening is, the customers benefit, the freelancers benefit, and Upwork benefits as well. It's a win-win-win situation, right? It's a win-win situation. And one more thing, if you ask me, right, is this a company that is humanity plus? I truly, truly believe so. One of the most noble things in starting a business is in providing jobs for people, right? When you can provide jobs for people, you're putting food on their table, you're feeding not just them, but their families,
Yeah.
right? And Upwork plays a vital role in, securing the futures of millions of people all across the world. And yeah, I really, really love that. I really like that a lot. And yeah, that's one of the reasons why I'm actually investing in the company. However, this is one of those growth stocks, right?
Mm.
With negative, they're not really earning money yet, right? They're
Uh-huh.
not really earning money yet. They're still, burning a lot of cash, right? Trying to build momentum and all that. But hey, I think there's going to be a tremendous, trajectory moving forward with regards to how work will be in the future.
Done in the future. It's really gig economy. I kind of agree with you, and it brings the cost so much down that it becomes so attractive. It's like I follow ARK Invest. I don't know whether you Kathy Woods who, and there's something called Wright's law.
Hmm.
After a certain volume production, the cost starts going down, and that's where I think she's looking the innovation, trying to control the inflation. You know. Uh, I think no, I get, but is there any you don't make any comparison between Upwork and Fiverr?
Honestly speaking, I like both. I absolutely love both. The reason why I like Upwork is because Upwork typically, the payment volumes, right, transaction volumes typically is a lot higher.
Yeah, the quantum is also higher
Yeah,
because I think the kind of market they work with.
yeah,
I get
exactly.
that
So
point.
the quantum is higher. The people go on to Upwork for different purposes compared to Fiverr, right? Fiverr
Yeah,
has done a lot of rebranding, right? Last time Fiverr used to be a joke website, it used to be a lot of rubbish stuff, cast the spell and find somebody on Fiverr. They used to have a lot of rubbish stuff. So they've done rebranding once they got listed. But then again, the quantum, per order for professional work to be done, that's where you can find it on Upwork.
yeah. No, I get it. Any other company you want to talk about, Rash?
Yeah, absolutely, absolutely. So this company is going to be a little bit okay. So I gave you one example, obviously, of like one of my growth companies, right? Which I really
Yeah,
like, right? Another one which I actually is going to be a little bit boring, but hey, this is my top holding, and
yeah.
there's a reason why it's my top holding, and I really, really love it, and that is Facebook.
Okay.
Right, as Facebook. And guys, let me just share with you all the reason why. And maybe when I explain and I share my thesis behind why Facebook, it might be a different point of view of as to how most people actually analyze it, right? But there are some features of Facebook that I really, really, truly love, right? So one of the things, Rajiv, that I always ask myself, if you speak to me more and more, is the company humanity plus? Is the company pushing humanity forward, right?
Okay.
And what are the initiatives they're doing to really,
Mm-hmm.
really help and add value to the human race?
Mm-hmm.
Right. So recently, Rajiv, I actually saw this one article. Right, Zuckerberg actually mentioned this, and as of 2021, you know, Facebook actually started this initiative called Facebook fundraisers.
Okay.
Right, Facebook fundraisers, where you could actually raise funds to your birthday, on your birthday or whatever not. You can actually do a Facebook fundraising, right? And through Facebook fundraisers, the platform has managed to actually raise $4 billion, right?
Wow. I was not aware of it.
Yeah,
Oh.
$4 billion for causes all across the world, right? Through
Mm.
Facebook fundraisers. And I think that is absolutely amazing, right? To connect people, right? So Facebook's whole idea is to connect people. And by connecting people, not just to connect people to just talk and communicate, but to actually, do great things to help society to create impact across the world. Man, $4 billion, right? Like that's something that I would be extremely proud of, right? Like building a company and people coming together, and it's just getting started, right? So on Facebook, what happens is, if you don't on your birthday, Facebook will say, hey, do you want to start a fundraiser, right? And some people
Mm.
just start a fundraiser. Okay, cool, for my birthday I want to raise funds for XYZ, this
Mm.
whatever society, for example. And if you know me, I'm very, very big
Yeah. Yeah. Yeah.
on
Very big on charity. Yeah.
I like giving charity. I like to
Mm.
impact and stuff like that. So when I see a platform that's able to connect people to give, oh man, I love it, right? I absolutely, absolutely love it. Obviously, that's not their main business model. That's not how they make
Yeah.
stuff, right?
Yeah.
But all the intangible aspects of the business that excite me, right? They really
Mm.
excite me. Another example. There's so many things that they're into, right? There's so many things they're into. Another thing that they're actually into is Facebook careers, right?
Okay.
Yes. So, interestingly, Facebook careers is where you basically can post jobs, you can find jobs. Everything is on Facebook. If you just click on careers, if you're in a transition looking for a job, you can easily go and find a job on Facebook careers as well, right? And all of this, Rajiv, all of this is possible because of this one economic mode that they have. And I'm telling you, in the entire world, I think this company has the mode which is the strongest, and that mode is network effect,
Yeah. 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 Yeah.
right? Their network effect is probably among all the companies. If you're talking about, yeah, as in there are some strong companies, but Facebook's network effect is very, 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 very strong, right?
Yeah.
Which basically allows it to get into any
Mm.
and every industry that they actually want to, right?
Mm.
They can challenge LinkedIn, they can
Yeah.
challenge they can challenge LinkedIn, they can challenge YouTube, they can challenge anything, whatever they want to
It's
send.
about the data anyway.
Absolutely, absolutely,
Yeah.
right. So
Yeah.
I think all of us on this, on who's hearing this call, will know that all of us will know for sure that the biggest and most important currency right now is data.
Yeah.
Right?
Yeah. Yeah.
Data. And when Facebook controls this, obviously Facebook is running into a lot of trouble because
Yeah.
people are
Yeah.
actually afraid of, hey, they control too much of our data, and
Mm.
they're able to shut us down. And obviously there's all these pros and the cons behind it. After investing for some time, after investing for all these years, I can tell you this one thing: it's never about the stock. It's never really about the stock. Beyond, of course, choosing the right company is important, but that's not number one.
Mm.
The most important thing in investing, which is above all else, is your risk management.
Oh yeah. Yeah. Saving money, I think, is more important than the bottom line. The downside has to be taken care of.
Absolutely, your risk
Yeah.
management is the ultimate most important thing, right? You can do the most amount of research on any company, on any whatever it is,
Mm.
but
Mm.
it can always go wrong, right? So hey, your risk management is something that is really, really, really important, right? I just to share with you, it, sometimes some people do some foolish things, right? Foolish,
Mm.
like recently I actually had a friend of mine who supposedly did a lot of research
Mm.
into this penny stock, right? And he piled a huge amount, right? Like literally, He had, I think, a $600,000 account, right?
Okay.
And he
Wow.
put everything into call options, put options, and stocks into this one company, right?
Mm, mm,
Thinking
mm,
thinking that
mm,
it's gonna
mm,
double and it's gonna make
mm,
him like his next $1 million, right?
mm.
And since then the company has dropped 50%,
Oh God.
and his call options are worthless. His stocks are down 50%, right? And
Mm,
I'm not too sure how his mental health is, right? But you know, when you do that, you got to understand that investing is a long-term game. You're not doing it for a
mm,
one-time win. You're trying to
mm,
invest for the long run. So some people they cannot see beyond the next 1 day, 2 days. They, you gotta invest with a long-term perspective, right?
oh, yeah, yeah.
All he was doing was, okay, I'm going into one bet, into another bet, into another bet. Sure,
Mm,
if it did pay off, Rajiv, you must understand this. Yeah, sometimes you hear stories like this where people take a huge bet and they make it huge, but how soon will they get the itch to go back to put everything they have into something else,
mm.
and then eventually they lose everything?
So many students, right? What do you tell them? What do you tell them to succeed in investing? What should be done?
Yeah, so one of the things that I tell them is that, hey, don't get carried away by your wins, right? Like, some people feel they're Superman after 1 month, right? After 1 month, they're making some money, and then they think, hey, man, this is so simple. Let me just do this forever, right? Like, sometimes you get some win behind you, you get one or two lucky breaks, it's okay. But you've always got to understand that anything and everything can happen in investing, right? And the most important thing and the most important tip, or whatever, something that I can actually just share is this.
Mm,
So in any given investment, ask yourself, is this risk something you're willing to take? Is this
mm,
something your portfolio can actually take? Very, very important. Rajiv, one more thing about options, powerful, right? However, a lot of people don't understand the numbers, and they start over leveraging as well,
mm,
right? They start over leveraging, selling puts without having the cash,
mm,
right? And buying calls with the entire account. And that's how I've seen so many bust the entire accounts,
mm,
right? Completely bust the accounts, meaning to say, like, nothing left, right? So it happens. So that's why I'm saying, right, understanding risk management, understanding your portfolio management is vital in achieving long-term success. Remember, guys, it's not just about getting, a 10% return this month, right? Chasing after the 10% return. What you want to do is you want to invest well. My advice to people would be, rather than aim for a numeric figure, aim to
mm,
invest well.
mm,
Aim to invest with a good long-term horizon. Aim to invest when good opportunities arise, instead of trying to
mm.
chase figures.
So it's a great thing you said. And on this, I'll share. I've been hearing this podcast from this guy called Dave Lee. Uh, I think if you've not heard, you
Yeah,
just
I
try to
found it
hear.
briefly on YouTube as well.
Yeah, he's amazing, and he's a venture capitalist, and then moved into he's a big time Tesla investor. One thing which I'm really liking what he's saying is that the average annual percentage gain is the old school thinking. There is so I think you should think in terms of two times, three times, 10 times. So if a stock wants to be two times, three times, or five times, it may not happen. For 1 year, your return might be negative. So are you going to say your performance is bad? And if you look at it from 1 year perspective, you'll sell that stock and you'll miss out on big exponential opportunity. So the exponential opportunity may not work like this. It would always work like this, the curve is very different.
Hmm.
And that thinking, I am kind of as I'm evolving with time, I'm kind of buying into that thinking that the annual percentage gain itself is a very traditional fund management houses have kept it to manage their balance sheets. The truth may not be that. I mean, again, it's all about your style. So so two times, three times, five times, 10 times, I'm moving more and more towards that thinking now.
Absolutely, 100%, 100%. So I completely agree with you. There should be a difference in the way people think. However, when a lot of new people are coming in, they have different perceived thoughts, right? So, well, it's a learning journey. Once people get into it, get into the trenches, they'll start learning. What is for them, what is not for them, whether trading is for them, whether investing. And I like how you're talking about it, Rajiv, because I remember earlier in the day, right, when we were communicating and everything, you were a lot more active and getting in a lot of trouble.
Yeah, yeah,
You
and
were
that's that's a problem.
Yeah, you were a lot. I still remember back in the day, you were, trading quite frequently and like, oh man, this is happening, that's happening, losing a bit of money here, a bit of money there. Can I ask you, right? So let me interview you now. I think we all learn from our biggest mistakes. What was your biggest loss, biggest mistake in investing in? Yeah, tell us about that.
You're asking me?
Yeah, I'm asking you.
My big okay, so Rash, I'm not boasting here. I haven't had any major loss.
No?
No, I haven't. So first thing, I'm my portfolio is not like running into millions. It's sizable, but I haven't had any kind of a loss where I've had loss of 50,000 or 70,000 or $80,000. No, because I've been very cautious in terms of investing.
Hmm.
Now it might happen in future because I have pivoted from value investor, as you said. I was invested in Facebook, Mastercard, Visas. Now these companies, very little can go wrong, right? They'll not go bust, right? But now I've pivoted to the companies which are slightly riskier. Now I'm invested in, let's say, Tesla. I wouldn't say risky investment; it's all in the mind. But let's say skills, for example, the gaming, it's $38, it's on 17, and my buy price is 38. Fastly, CrowdStrike, C Limited, I think is a great company, but Mercado Libre. So now in future, I might see those things happening, but I'm just trying to see that over a 10-year period, whether my gains can exceed losses by whether I'm able to create that alpha. You know what I mean? I
Yes.
may make some losses. So I'm not looking at an individual stock gains or loss. All I'm looking at a portfolio. Where does the portfolio go within 5 to 10 years? So maybe so I haven't had any such loss so far, Rash. I've been lucky.
Hey, you're blessed. You're very, very blessed, right? I have a different story, but that's great. That's great, right? Again, the reason
Oh,
why
what's your story?
Yeah, great question. I was hoping you'd ask me, right? So, yeah, I was hoping you'd ask me. So, well, let me just share with you one of my greatest losses. One of my greatest, when my heart dropped, and that was when I was investing in Facebook. So, if you remember, Cambridge Analytica,
Oh
20
yeah. The scandal which happened. The company closed down, right?
Cambridge Analytica, right? So
Yeah,
Facebook. So what happened was, overnight because of the news, Facebook dropped 20%.
yeah.
Facebook dropped 20%. And I was like excited. I genuinely was excited, right? I genuinely was excited. I still remember very, very clearly it was $200 to $180, right?
Hmm.
200 $180. And I was genuinely excited. And I started loading up.
Mm-hmm.
Started
That's the
loading.
right thing to do, isn't it?
Yes, no, right? So the story basically is from 180, it went to 170.
Hmm.
From 170, it went to 160.
Hmm.
From 160, it went to 140.
Hmm.
From 140, it went to 130. Right? And you might think it's easy to say on hindsight, oh, that's fantastic, Resh. Oh, no worries, it's a bigger
Hmm.
discount. But for somebody who has actually put in a huge amount of money at 180, man, it was tough.
Hmm.
It was really, really tough, right? Like, like at that point of time, I was seeing my account down by six figures,
Wow.
right? By six figures. And I was like, like suddenly you lose faith. Suddenly you're like, can Facebook even survive anymore? And then all these questions start coming in my head.
Panic sets in.
Yeah, panic sets in. And
Hmm.
panic sets in when your portfolio sizing isn't correct.
Yeah. 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 That's true. That's
Right?
true.
Panic sets in when your portfolio sizing isn't correct. See, the thing is this: I don't care whether the company is Facebook, Amazon, or whatever company, right? Like anything and everything can happen. If history has shown us, right, through Lehman Brothers, through some of the biggest companies in the world, through Kodak, through Nokia, anything can happen.
Yeah.
You must
Yeah.
understand that there's only two things that is, it's a beautiful saying, right? There's only two things that are confirmed in this world: there's death and taxes,
Hmm.
right? There's no company that is too great to fail. Anything and everything can happen. And at that point of time, I was leveraged. I was heavily leveraged on call options,
Oh.
which I bought at 180, right? I was heavily leveraged on selling of put options, and it was way, way above what my portfolio could take,
Then
right?
what
So
happened?
yeah, it
How did
was
you come out of
so
the hole?
yeah. So dude, I had to go obviously and close positions, right? I had to,
Okay.
I was forced to close positions, and it sucked because I knew that the potential, and if I just could wait on and everything, that it would rise back up again. I knew that. Right? I knew that. Right now, we're looking at it being over $300, but I knew that. But unfortunately, because I was over leveraged, because I was trading with,
Exposed. You
because
got exposed.
yeah, because I was biting more than I can chew,
Hmm.
it didn't work, right? So this is a word of caution, right, with regards to leverage. It's something that you hear a lot of stories about people like making it big, but let me tell you something. With leverage, you typically hear more people busting everything, right?
It's greed.
Yeah, exactly, right. So like most recently, we are recording this on the 15th of April, right? Just last week the news came about with regards to Bill Huang, right, who lost his entire fortune of $20 billion in 2 days.
Is that yeah? I didn't follow it so much, but I heard about it. I heard
Yeah,
about it quite a bit. Twitter
yeah,
is
exactly.
buzzed with that.
Archegos Capital, right? So
Yeah.
again, it was all to do with leverage, and the companies that he bet on just went south, and it affected all the banks, right? All the banks got affected as well because they all leveraged in his fund, and man, it was absolute chaos, right?
Yeah.
But $20 billion in 2 days, and it was all because of leverage, and these are trained professionals,
Yeah,
right?
no, I think I remember the story when I was in uni. I read about long-term capital management, LTCM. I don't know whether you're aware of that LTCM. It was they hired Nobel laureate as the as a quant analyst, and the fund badly failed because it went some wrong bets. It was heavily leveraged. So it's a two-side weapon. Leverage can benefit you, can take you to big hole, and you know
So
one thing.
let me
Yeah.
share with you, Rajeev, one of the things that actually has come to my mind is this, right? As humans, we are, as humans, every one of us, you, me, all of us, I don't care who you are, all of us have emotions, all of us
Hmm.
have greed and fear. It's very easy to say, take your emotions out. That's
Yeah.
bullshit.
Yeah.
It's complete BS. It's impossible to take your emotions out. If you take your emotions out, you're not going to be human. What makes you
Yeah.
human is your emotions.
No, and on that, this is a great thing you said. So I really liked what David Gartner, the Motley Fool guy, said that your portfolio should be a reflection of your personality. Now,
Mm.
when your portfolio is a reflection of your personality, emotional management is easy because it's you. You know what I mean? Now, finding that sweet spot that your portfolio is a personality of you is not an easy thing. It's a continuous process, but then it makes things easier for you. I think one thing which I want to ask before we close is which stuck to my mind, and yesterday I talked to you on phone as well on that is about you especially. What struck to me was COVID. Yeah, we were in the middle of COVID, and I was hearing your lessons, lectures to different people, and you said something. Oh yeah, this is time generational wealth will be created, and you wouldn't even know how much money can you make during this time. And I remember that some of the Singapore famous investor like Sean Seah sold all his portfolio because he thought the real economy is going to shit. I just thought that I didn't agree with, I didn't find that school of thought also good, but I found your school of thought also very extreme. But what has happened that I look back and the returns which stock market has given in 2020 is generational. So I just want to know what happened. Why did you think about it? I just want to understand the thought process. It's very valuable to me.
Okay. So let me share with you the thought process and why I feel it was generational wealth is going to be created. Okay. So number one, so Rajiv, during the worst times in history,
Hmm.
the greatest inventions were created,
Yeah.
right? You look at some of the greatest inventions like penicillin. Penicillin was, I'm
Yeah.
just going to give you history, right? Penicillin, was created in World War II.
Hmm.
Many of the biggest inventions in the world are created during times of crisis.
Hmm.
In crisis comes opportunity, right? One thing that I'm bullish about is the human spirit and the human's willingness to improve and to find for solutions. That's something that I'm very, very bullish about. I've been bullish about, and we all should be, right? Like if you're a believer in humanity, right? Humans will always find a solution to get out of whatever rat hole they're in, right?
Mm,
So, if they are stuck at home, if they are stuck at home and they can't go out, humans are immediately thinking about, hey, how can I make this work? What can I do
mm,
to, still generate income even though I'm at home, right? And,
mm,
Rajiv, I saw this from my own business. Yeah, I saw it from my own business. So
mm,
in terms of my own business, running seminars around the world, right?
mm,
We were obviously very much affected because just like that, everything
mm,
got cancelled, right? Imagine we go
mm,
to our seminars, that's the traditional thing, right? So
mm,
everything got cancelled, and I was like, man, right? For this moment of time, we were paralyzed, right? But immediately we sat together, we thought, hey, okay, cool. How can we pivot? How can we change? And within
mm,
1 2 weeks, we started creating online virtual events, and then boom, what happened was, right? What happened was people started coming in, and people started coming in from all over the world, right?
mm,
Where in live events where we would have, 30 40 people attending the event, right now there would be 300 400 people attending, and I was like, wow, right? And we were at home, right, without having to spend money on rental, without having to spend money on all this other stuff, without having to go and
mm,
travel to a place, all at the comfort of our home, and we were impacting hundreds of lives all across the world, and this was not geographically limited.
mhm,
So what was happening was that space was being compressed, time was being compressed, right? Space meaning to say like, hey, now I don't care whether you're in the west, whether I'm in the east, it doesn't matter anymore, right? We all can gather, we all can listen to each other's wisdom, whatever we're sharing, and all of that is compressed, and time is being compressed. And I realized that it wasn't just for my industry, it was across all different industries, right? So one thing, Rajiv, that I really believe is this: money is never ever ever lost, right? Money is never lost, right? In the entire system, in the financial system, money is just transferred. Money
one
goes
hand to
from one
another, yeah.
hand to another hand. I always say this: money goes from one hand to another hand. There were some industries that were obliterated, that were destroyed, but that money flowed somewhere else,
Mm,
right? That money flowed somewhere else. Like to give you an example, right? So to give you an example, could you name me a business that was destroyed?
mm, airlines.
Sure, right? So like airlines, for example, right? Airlines and all that definitely affected majorly. And if you ask me, right, could airlines pivot their business? They couldn't. No matter how much they try, it's impossible to pivot, right? Airlines about flying, you can't fly. There are restrictions, you can't fly. That's it, right? So airlines would die. So it wouldn't be a wise thing to actually invest in airlines, right? However, other industries, just grew so much more rapidly, right? So instead of airlines, what happened was, instead of airlines, that money basically flew out to actually buying all these local attractions, and shopping online and getting
Mm,
all your homemade equipment
mm,
and stuff like that
mm,
as well, right? So like, for example, give you another example, like gyms were closed down,
mm,
right? Gyms were closed down, and all these gyms, they couldn't operate, right? So in Singapore, for nearly about 2 3 months, all the gyms were closed, right? But my friend, who actually sold gym equipments, his business was so, he was
oh, because
completely,
people bought it at home.
yeah, exactly. So his business, where
Mm.
he was selling gym equipment, his business was completely sold out. The orders were through the roof. He couldn't take it anymore, but he made his biggest revenue month ever, right?
So no, one thing. So this was your vision. It was not some technical indicator you were looking at.
It was not a technical indicator. It was just understanding that, guess what? Right now, simply because we cannot be offline and we have to be online, costs would obviously be reduced, right?
Yeah.
Costs will reduce. And interestingly, cost is reducing, but revenues are increasing,
Mm-hmm.
right? So let me give you another example, one more example. Back in the day, Rajiv, right? Back in the day, just last year, I used to travel every week to Malaysia
Mm.
to do workshops and investing workshops and all that. Every week I'll fly to Malaysia. For the company, the expense wise, I have to fly, I have to book a hotel, I have to book my taxis. It's a few $100, right? To go and speak to 20 people, 30 people. Will we ever do that again?
Mm.
Never. Right? We'll never do that again. Why? Because, guess what? You want to meet 20, 30 people, why not just switch on Zoom and it's done? I don't have to spend money on hotels, accommodation, I save so much money. So all these costs are being cut. So what we realize, not just in terms of my business. So again, right, this is a stat which actually has been released, right? Like business meetings. It's business meetings has basically, like, I don't care like whether COVID recovers, everyone gets a vaccine, but business meetings have just gone down. People have realized that right now, if I want a business meeting, I can just meet online. It's so much more
Mm.
convenient
Mm.
instead of
And, and
flying.
and then you can meet 200 people online. You can't meet.
Exactly.
So,
Exactly,
so
right?
I think there's a evolution there. Okay. So I know I was keen to know whether it was some technical indicators you were, because I've seen you are very good with technicals also. So whether you were looking at technical indicators or whether it was your hunch and your own. I mean, that shows the maturity.
Can I share one resource? All right. So I want to
Yeah.
share this one resource, and this is one book that I read that changed everything for me. And the one book is this book called "The Future Is Faster Than You Think."
Okay. I haven't read it, and I'll read it. I'll
Right.
make
So
sure I'll buy it.
let me just share with you this book. Right. Yeah. So basically, the book is called "The Future Is Faster Than You Think," and the subtitle of it is "How Converging Technologies and Are Transforming Businesses, Industries, and our lives." So this book is by this guy called Peter Diamandis, right? So
Okay.
Peter Diamandis is one of Tony Robbins' most trusted advisors,
Okay.
right? And Peter Diamandis, interestingly, is this guy who is a futurist. He sees into the future and he can actually tell what's actually happening in the future, right? And if you turn to the back of the cover, he actually said something. He said, in the next 10 years, more wealth will be created than the last 100 years combined.
Wow. Look, I kind of intuition. I agree with it. I agree with it. Intuition. And I don't have figures to, but the way the world is going, I think it might just be true.
It's already happening, my friend.
Yeah.
It's already happening. You look with regard. So again, in the book, they talk about blockchain, for example. And,
Mm.
over the last 1 year, how many millionaires have been minted because of we are seeing returns of 10x,
You've
20x.
seen Coinbase. Look at Coinbase.
Yeah,
So,
exactly. Right. So it's crazy. So he mentioned that, and my question to you and to all the listeners who are listening is this: which side of the train are you going to be on? Right?
mm,
Are you going to be part of are you going to be part of the train that makes that more money than you've made in your entire life, or are you going to you know not evolve and be on the side that doesn't change, right? We are living in a very, very exciting time. Things are moving tremendously fast. So as humans, we got to keep up, right? We got to keep up. And there's so many things to learn and grow, and sometimes there's information overload, right? What's right, what's wrong, and what's happening, what should I do, right? But one of the things that is important is to always keep in touch with what's happening, right? Because I'm telling you, these technologies that are happening are shortening time, shortening space. It's insane, right? As in, even with the vaccine, when have you ever heard of vaccines being created in 1 year, right?
yeah,
Like that's
everything
always,
changed.
yeah, that's always up to debate, right? Like, hey, is it safe, is it not safe, and all that. But things are moving faster and faster. Things are becoming more and more efficient. People are finding ways in which you can build houses based on 3D printers, right? People are finding ways in which you can not have to fly anymore. You can actually have business meetings just on Zoom, just like that, and save so much time. And when time is saved, money is made.
Ah, that's a good one. That's a good one. The time you saved, money is made. I mean, that's a good way you put it in. I think, Rash, one thing I want to tell you, this is such an engaging conversation with you, and I loved every moment of it. I mean, I'm supposed I'm supposed to interview you, but I felt part of this, talking to you, and I think we should continue it. Maybe we talk again, pick some topic again, and talk. Maybe do a live session with you. I think there is a lot you can teach people. I'll connect with you on that. But for this, thank you so much, Rash. And you've been recently married, I guess. I saw some of the pictures, right? So I wish you all the best, a very blessed married life. And I sometimes we should chat about your charity initiatives, what you're doing to make lives better for other people. I think I'm not finished with you yet, but we'll chat soon, Rash.
Rajiv, it will be my absolute pleasure. I have had a lot of, this is a topic that I'm very passionate about. I love talking about this, right? And hey, let's learn and grow together, guys. If you have been watching this video, make sure you like Rajiv's channel, subscribe to his channel, smash the like so his algorithm goes up. Do all of that, right? Click on the like button.
Thank you, mate. Thank you so much.
Okay, take care, brother.
Hi, people. Thank you for watching. I hope you found the content inspirational. If you like the content, please subscribe to the channel and press the bell icon. I'm now available on Apple and Spotify as well. Just type Building Wealth with Rajiv. We'll chat soon. Till then, keep building, keep smiling.